All right. Good morning, everybody. We're going to get a little bit more data today. Kind of goes to the focus that everybody's on with the Fed. But really, until we get more jobs data, we don't know what the Fed is going to do. There's been talk about things slowing down, but the metrics are all messed up for a number of reasons. Job demand is down due to, deportations and that sort of stuff. And yet unemployment isn't matching the way it used to. Like the numbers are just all messed up. So the market is having a hard time seeing through the data. Hong Kong's in the red with the Dow. Dow's basically flat. Japan up a quarter. Small caps is leading this morning at 0.5%. We're getting that small cap resurgence again. That really doesn't seem to last through the morning. So if you can't find anything else to play, maybe just, running against those guys for a little bit. Europe up about a half. Otherwise, we're just kind of hanging out, waiting on data. So we're going to get services PMI and ISM services this morning, 9:45 and 10 o'clock. Kind of a big deal. And if you look at the U.S. trade deficit numbers, negative 75.5 plus 61. That is a major number discrepancy there. Kind of want to see how that plays out. Now, of course, with the tariffs and everything else and these hypothetical numbers that he's throwing around, maybe that's why there's such a wide divide here and there's not going to be any shenanigans. But just watch the clock, 8:30 U.S. trade deficit. Make sure these numbers don't give the market some kind of shock and awe. We got some auctions today. The 1 year and the 3 year auction. It's not that they're not important, right? They're not my favorites, and they don't generally get a lot of attention, but they are auctions for the day. So yeah, keep your eye on them, right? It doesn't hurt to keep your eye, watch the clock, make sure you don't get run over. Tomorrow we have the 10-year. I like that one. See, they're trying to price in this rate cut, and every time they try pricing it in, then they don't get it. Then they get a little salty and unwind it again. And we got Jackson Hole coming up, and it's just hard to say what Powell's gonna do when it comes to Jackson Hole, because that 2022 mic drop moment was just classic, and that is his podium to really just say what's on his mind, and we may hear it, even if we don't like what he has to say. So everybody's still buying the dip. That's still a thing. It hasn't stopped yet. None of our signals are showing significant shorting pressure. And price certainly hasn't, flipped around to show us the other side. So until we get something like that, then let's play what we have. We were talking yesterday about whether or not this was going to be a low, or if we were going to continue to go lower first before we set a low. Well, it's set. It is a lower low. So we had this one, and now we've got this one, right? So it is a lower low, but it is confirmed since we ran back up off of that low to close up here. So now we've got that. It's a good step. I know it may not seem like we accomplished anything, but we really did. But now we need to figure out what we're doing up here. We have to meet or exceed this level. Anything else is going to give us a lower high. Then we'll have one lower high and one lower low, and you need 2 for a full set. Once you have a full set, you have a trend. In this case, it would be a downtrend since we have 2 lower highs and 2 lower lows, but we don't have any of that yet other than the lower low. We can set that lower high and still not come down and make a new lower low, and that would put us in like a complex topping pattern, and it wouldn't be establishing, a long or a short at that point. It would just be us in a complex topping pattern, and we can get into a topping pattern and still come out of that to the upside. So just because it sounds like it's, the end of a run, it doesn't have to be. There is also the measurement that we were looking at yesterday, 63.54, and we ran up to close above that level yesterday. Well, now we need to keep it. Can't give it back. And we're trying to get a 310 surge here, which would be nice. That would be a bit of a bullish fuel for the drive back up, give us some momentum to perhaps break this 64, 68 level. But we don't have the crossover yet. And really, we're just dancing on the 10 at the moment, which we can see on the intraday here with this blue line. That's the 10-day moving average. We ran up into it last night, and we're just dancing on it this morning. We are back above the 20, which we cut through yesterday after the open, and then we rested on it for half the day before we kind of took a springboard beyond it and ran up to the 10. But we are holding right at yesterday's close, and this isn't exactly a Marbozu candle because of the little tails on it, but closing this strongly on a bar has merit, right? If we were doing like an OCR style analysis, that would be significant. It just didn't get up above Friday's level, right? This 8-1 level. That would have been a better close. But closing as high as it did still was a very bullish maneuver. We just need to keep it on the follow through. So some levels to really keep on your radar is yesterday's midpoint, which I would recommend just marking it while you're out there on the daily. So 63.11 cog line, you should already have that one on the chart anyways. If we break this mid 63.54, then 63.11 becomes the next critical level that we need to keep. The reason it becomes a critical level is just because of market dynamics, right? If we've started this move to the downside, we want to hold this half to try to turn all of this around, right? If we don't hold that half, then it's very likely we're just going to come on down and break that low and set a new low. So we need to hold that half. It would be better if we held this 63.54 half and don't even get down there to tempt fate. When we look at what they got done in the overnight hours, it wasn't much. Whether you're focused on the IB or the kill zone, in fact, the kill zone is where we actually got the meat of the move. We really didn't get anything done. We're still inside this range, and that needs to change if we're going to get anything else done, right? That is the box, GTFO. Got to get out of the box to get anything else done. And it's a really narrow box, all things considered. So get out of the box to the upside, so we can challenge 6,400, 6,450, previous highs, get out of the box to the downside to retest the 20 period and 63.11, and then the volatility trigger down here. Of course, there's some cog lines and other minutia, but that would be the big ones. It took quite a bit of effort to get through 63.50. So if we do start to fade this morning through our own Globex low, I'm really looking for 63.50 to help us out. Plus that 63.54, they're close enough together that they make a little bit of a zone, the 4-point range, where we would like to see price get defended and then pick it back up again. So we'll see. I think if we lose that level, we're going to challenge lower levels. They didn't get a lot done, but there was a lot of volume last night, all things considered. 64,000 in the overnight's not bad. Generally, we see this between 40 and 70 anyway, so it's in the normal range. But if you think about it, they put in 64,000 and we're basically where we were when we started. Like they didn't get anything. We got a doji on the daily so far. And because we're basically sitting in a doji and we haven't done anything, we're nowhere near either one of the ADR lines. To hit the lower ADRs is easier since all we have to do is stay within yesterday's price range. To hit the upper ADRs, we need an inside day breakout, which we've already tried multiple times this morning and failed. And we would need a new Globex high. We can do it. We just need to get it done. So far, we haven't been able to do it. There's no market maker move showing, so they're not hedging in front of this data with that really wide discrepancy that we were talking about. If they were concerned, they would be hedging, and they're not. Doesn't mean that I'm not going to be concerned, but they're not concerned. Not yet, anyways. Today's floor pivot is higher than yesterday's floor pivot. That's bullish. Price opened above it, and that's also bullish. We're completely outside the channel at this point. Now, markets like to hit that daily pivot, and the fact that we haven't hit it kind of implies that we're going to go down there and do it. But at this point, we've got an MDP. That's a missed daily pivot. We won't count it for today because, well, until the day ends, we don't know that we actually made it through a whole day without hitting it. We could hit it at 355 and then it wouldn't be an MDP, right? So it don't count until tomorrow, but so far today, we have not hit this line. So we have an MDP in play. It is the start of how trends run. If you look at yesterday, for an example, or Friday, that was an MDP to the downside. We didn't hit it and we just ran away from it the whole day. After crossing significantly on the previous day through the floor pivot. Well, flip all of that around. We crossed through the floor pivot yesterday and we closed well above it. And then we opened quite a bit away from today's floor pivot, and we are so far continuing to keep that distance. If we can do that, maybe even get another run today, we would open tomorrow significantly above the pivot, and we'd have another MDP. We are back above the weekly floor pivot, and we're outside of that weekly channel. Being above the weekly is bullish. So we've changed our bias from bearish to bullish. And so far, holding above that daily pivot reinforces the idea that we shouldn't be looking for shorts. But we need to keep that 63.54, right? We don't want to get back down underneath there. Otherwise, things start to get ugly. Not expecting a run, but if we do get one, 6409 is the R1 and 6290 is S1. So you can see that S1 is closer than R1, which implies that the levels are pointing upwards. They are smart levels. One side is generally closer than the other, implying which way the market thinks price is going to go. These pivots are pointing to higher. All right, we talked about how we can move through shallow areas relatively easy. And we had this shallow area here that we cut through really easy to the downside last week. And we ran back up through it, but we got a little wrinkle. We put in a lot of effort here. And so it's no longer a shallow area. We built up a footprint, 63.42. It was funny about that 42. It used to be a cog line back in the day, but it wasn't consistent, and I kicked it out. Back in like 2,800, 29, 3,000. It really doesn't seem that long ago when the SPX was trading, 3,100, that we would have that 42 level as a cog. And I don't know, maybe it's coming back. It seems that we're running into that cog line more and more, but not today. So 42, we do have a volume profile on the week, point of control at that 63.42. If we do try to make a move to the downside and we get through 63.54 and 63.50, then we've got 63.42 down there as our last line of defense. Otherwise, we start working on the 50s and we'll go from 63.50 to 62.50. I did mention that to you guys, right? Multiple times last week and yesterday that if we broke 63.50, we were headed to 62.50. Now, we didn't stop on a dime right at 62.50. We overshot it by, 10 points? But you get the idea, right? We're running in halves. So if 62.50 breaks, we're going to 61.50. It's just the way it's going to work out. So let's keep 63.50 so we don't have to check that with the 62.50, and then we won't find out if I'm wrong about 61.50. All right, the TPO and the volume profiles point of control are now lined up. The value areas are just slightly off, but that's not going to bother anything. We don't have a classic shape on the volume profile, but the TPO is almost showing the classic P shape. Significant resistance at 64.11 cog line, which is overhead. If we can get through that and keep it, that would be fantastic. There's just no reason to believe that we're going to be able to get through there in the first shot. We would need some really good juice to get us up through that level. It's also not going away anytime soon, since the level was built on candles from a week ago, and this is a 10-day chart. So we got 1, 2, 3, 4 full days that we have to get through before we even start to see the candles that made this. I'd even argue right into day 5 before we start to see those candles. So we've got plenty of time to get up there, plenty of time to get through there. And unless we build out another level, that's going to be our level for a while. A contender right now would be this lower level, 63.47, but we don't know how much of this is from back here that we're going to wipe out on the table today, because it's unlikely that this little bump gave us that much volume, right? So it's more likely that these guys, that's violent, these guys back here are responsible for that volume level. So then we won't even have that level. The takeaway is that this point of control isn't going to move anytime soon unless we put in some major work somewhere. And at this point, that's not likely. So we just got this significant resistance sitting over our head at 64.11 cog line. We do have a new VPOC from yesterday. I don't set these things right on the line because I'm just going to round it to the nearest point. But you do you. So 63.45 for me. Yesterday's point of control. And we've got this little double volume zone. Let's move that up one more. That's better. So we got a distribution here. Then we've got another one here. So that 63.46, that's the point of control. And below it, we've got like this backup area, 63.40 to 63.36. Now that I'm not so zoomed in, you can see the distribution better. And technically speaking, we could classify that as a P-shaped profile, even though it is two distinct volume nodes. We can wrap them up into one since they're both in the value area and just kind of call it that classic shape, just like we had that classic B on Friday. Narrow range last night with a classic D-shape contribution this morning. The point of control on both of these are basically lined up. I mean, it's not perfect, but it's all right. And there's not a huge discrepancy between these two. It is notable that this volume node is farther to the right than this one. But if you look at the TPO volume nodes, it's the other way around. This one expands more than this one. It's a discrepancy that doesn't really provide any context at this point, since the whole thing is just one big distribution. But if you had seen something like that and it was on a wider chart and a wider scale, perhaps it could, be something more relevant. The weeks range 63.98, basically, right? Just round that up to 98. We're almost there. So that's how wide the week's range is. It was our projection on how far we could go this week to the upside or the downside. And we pretty much made the whole week's move in a single day. So when we consider, was yesterday an outsized move? Yeah, I mean, a little bit, but not enough to count, not enough to matter, right? We know that in bearish market conditions, we can get some of the biggest bull moves in history. We weren't necessarily in those conditions, but when we were down and then everybody buys the dip, then we just pop right back up again. But we didn't exceed the week's range. And we've seen before on a Monday where we've broken the week's range and closed beyond it by a major amount, all in a single day. And we didn't do that. So yeah, it was a decent sized move, but it wasn't wow size. It's good, but it wasn't that good. We are back above the 10, but just barely. And the 10, it has its own sort of gravity. Within a 0.5% above and below, we can get into this zone and just chop there. It's not necessarily a bad thing either. It's how markets generally work to heal itself if it's made some violent moves, usually when it got caught by surprise, right? a CEO getting arrested, uh, a lawsuit hitting, something that nobody saw coming that shocked the market, broke it a little bit, and then it needs to heal. A lot of times it'll heal just by kind of snuggling up with that 10 and, working things out. Markets need a correction, so a correction through time is often how it gets that done. We don't know yet if that's what we're going to get, but as long as we're holding around that 10, then we're healing, and that's a positive thing. Now on the 10-week, we've already started to expand away from it. The 10-week moves every day, just like the 10-day does. It's not supposed to technically update until the end of the week, but it's moving, right? It's just the way brokers work, that the math is changing every day and it's moving. So every day the 10 has a move, and then we have a move. We ran to the upside pretty hard yesterday, and we ran farther than the 10 moved, and so we outran it. But we're not extremely overbought here. That's why that move yesterday, yeah, it was fine, but it's not even a record setter. And this shows that we're not overbought, we're not overextended, we didn't move too far too fast, and it doesn't owe us any sort of pullback. And that's the main issue, right? Is that, did we go too far too fast? Nope. And looking at the sectors over a 5-day period, nothing has changed. They're all still red except utilities, and utilities is still up more than 3%. So in the grand scheme of things, after everything was said and done and shook out yesterday, we are where we were Friday at the close or Monday at the open. We got nothing. So there has been no change to the play. IPO is a funny ETF that for a long time I never really paid much attention to. But when it comes to monitoring small cap plays, when IPO, which is not a company that is going IPO, but an actual ETF called IPO, when that ETF starts getting a lot of love, small caps are coming back into play. And it just had a breakout or a breakdown. You can see it says breakout or breakdown today, IPO. Now it's a thinkorswim custom indicator, and trust me, it gets things wrong because, well, it's thinkorswim. So you always have to go out and validate or verify. But over a 5-day period, IPO had been up. Just put it out here on a daily. Yeah, that sure looks like a breakout to me. But when we put it out on a weekly, we've still got all this trash up here. And that's because if we can actually get through 50, then we'd be focused on 100. And so they're really guarding that 50 level. We can't even get to it, let alone get through it. If we do manage to get that breakout above this previous level, then 50 is going to be the target and the stopping point. But I'm not looking at this to trade it, right? More looking at this as what's going on in small caps. What a move in small caps, right? So, yeah, keep your eye on small caps. They're not done yet. We've seen at the start of this that IWM was up this morning more than all the others. So IPO over a 5-day period is up more than 3.5%. It's basically flat this morning because it doesn't really move much in the pre-market, but small caps ain't done. So looking at things that are down this morning, the Mag 7 down volume is down. Yeah, I know. The double negative, and it's kind of weird. And the dollar gold ratio is down. We don't really look at that much in the morning briefing, but it's worth noting. And miners are down. or at least some miners. Looking at what's up this morning, China, nat gas, Mag 7 up volume is up. Yeah, I know. It's a little weird. Value is up, which is a little off. I'd be, expecting growth to be up, not value, but whatever. Uranium, China again, China again, China again. Tech, chips, China again, Mag 7. But no, we lost our 0.5%, right? But it's moving in the right direction and it's getting close. Quantum's up. It's just not up enough. And there's our growth down here, up, but not up enough. So we need more out of Mag 7, Quantum, and growth. It's just kind of dragging its feet. Noticeably missing is Bitcoin. That's our risk on asset. And if they're not willing to play Bitcoin, they ain't willing to play anything else. So uranium, China, chips, tech, pot, small caps, China, Mag 7. But they're lagging, right? They need to get there. So a little light on their feet. They're moving in the right direction. I would want finance, preferably banks, not this generic XLF. I'd want them up, and then more out of the Mag 7 group and some Bitcoin. We can rally with what we have because we got chips. But really, it's just, let's get something else in there. Mag 7 has a lot of communication in it, so we could get some communication names in there. Just something. Otherwise, we start to look around and ask, where's the push going to come from? Who's going to provide the fuel? I got the 10-year on the left, the dollar in the middle, and the ES on the right. We just look at that reversal on the ES. And it's basically where the 10-year stopped falling and the dollar stopped falling. But they didn't rally with us. They really just stopped falling. At this point, not going anywhere, or at least not making any big moves, is really going to help us out. Whether it goes up or down and how that is going to help us, we don't know yet. We always have to check first. It's not like the VIX, right? When the VIX move, we got a pretty good idea what's going to happen to the market because it's pretty consistent. With these guys, you always have to evaluate why it's moving to better understand what its effects are going to be on the market. So not moving at this point would just be a good way to go. And if it does start to move, then no big moves. So pretty simple, guys. 8:30, 9:45, 10 o'clock. After that, keep your eye on the auctions and just try to get out of the box. Once we get out of the box, we can play the levels. And until we do get out of the box, then you've just got a really small range to play. And it is a very small range. So get out of this box, and whichever direction we go, up or down, you've got the levels to play it from there. Be careful, be safe. I'll see y'all tomorrow.